Here are the crypto top headlines covered in this video. Avalanche Foundation introduces Visa crypto spending card. Next, Bitcoin analysis sees lower risk aversion as retail demand adds 13%. Also, CFTC chair says agency is handcuffed as crypto regulations stall, says report. Welcome to Crypto Top Headlines, where there are no speeches on my opinions, just bringing crypto's news to you. I would greatly appreciate it if you would click on the like and subscribe buttons as well as the notification bell. It does help support the channel, so thank you in advance for doing so. Now, on to these headlines. Our first top headline, Avalanche Foundation introduces Visa crypto spending card. The Avalanche card is a credit card linked to a self-custody wallet and unique address per asset. The Avalanche Foundation, the non-profit organization behind the cryptocurrency and blockchain platform Avalanche, has introduced a Visa cryptocurrency card. Avalanche took to X on October 21st to announce the launch of the Avalanche card, a new Visa card allowing users to spend cryptocurrency. According to the post, the new Visa card by Avalanche will feature support of Circle's USD coin or USDC stablecoin, wrapped AVAX or WAVAX, BENQI liquid staked AVAX or SAVAX, and others. The Avalanche card will come both in physical and virtual form, allowing users to spend their crypto wherever Visa is accepted, the foundation stated. Avalanche card linked to self-custody wallet. According to the Avalanche card's website, the credit card is linked to a self-custody wallet and unique address per asset. The card's description notes that user activity is not reported to the credit bureaus. The website says that while introduced by the Avalanche Foundation, the Avalanche card is offered by Rain Liquidity, a provider of financial technology services. The card's details also indicate that the Avalanche card and Rain Liquidity are not banks and are not insured with the Federal Deposit Insurance Corporation, adding, the Avalanche card is issued by partners licensed in their respective jurisdictions. Cryptocurrency is not legal tender and may lose value. Latin America and the Caribbean among the first supported jurisdictions. The Avalanche card's website specifies that it will initially be available to individuals who are residents of countries in Latin America and the Caribbean, residents or citizens of Cuba, Venezuela, Nicaragua, Russia, North Korea, Syria, Iran, along with the regions of Crimea, Luhansk, and Donetsk, are not eligible to sign up regardless of where they reside, the website notes. The card's details also mentioned that there is no spending fee with the Avalanche card, while asking users to refer to the full list of card and service fees included in the card's terms. As reported by Cointelegraph, the cryptocurrency industry has previously seen the introduction of crypto payment cards. Some cards allow users to spend cryptocurrencies like Bitcoin directly from self-custody. One such solution is Tangent's Visa card, which the issuer claims allows one to send crypto directly from the self-custodial wallet. Let me pause here for a moment. If you're getting value out of this video, please click on the like and subscribe buttons as well as the notification bell. Our next top headline, Bitcoin analysis sees lower risk aversion as retail demand adds 13%. Bitcoin transaction volume analysis hints that retail interest is slowly returning in line with BTC price upside. Bitcoin retail activity is mimicking the BTC price run to all-time highs after months of stalemate, new data suggests. In one of its latest quick take blog posts on October 21st, on-chain analytics platform CryptoQuant unveiled a 13% jump in transactions worth less than $1,000. Bitcoin small investors show signs of life. Bitcoin retail interest has yet to stage a noticeable comeback after declining dramatically following March's all-time highs for BTC to USD. While mainstream interest outside institutional circles remains lacking, Particularly when viewed through metrics such as Google search data, there are signs that change is coming. For CryptoQuant, contributor Caio Oliveira, transaction volume figures hold the key. In the last 30 days, retail demand grew by about 13%, highlighting a scenario that was only seen in March when we were close to the last historical high, he said. Note that in the last 4 months, we have seen a decrease in the activity of these small investors, while whales maintained a high amount of transactions and absorption of coins. In the 30 days through October 20th, BTC to USD gained nearly 10% data from Cointelegraph Markets Pro and TradingView shows. Transaction volumes worth up to $1,000 increased by 13% in the same period, and an accompanying chart shows similarities to the weeks before the March peak. This recent rise in Bitcoin is causing small investors to return to trading, signaling the beginning of a pattern of lower risk aversion, Oliveira said. Coinbase premium lags despite $69,000 BTC price trip. Risk aversion is a theme currently on the radar for many crypto market observers. Global liquidity trends are increasing broader risk-on appetites, and commentators see the trend strengthening through the United States presidential election and beyond. Both BTC and ETH have yet to clear July highs, but are closing in on key 70,000 and 2,800 resistance levels. Trading firm QCP Capital wrote in its latest bulletin to Telegram channel subscribers on October 22nd, a break above these levels is likely to attract massive retail attention. With the U.S. elections just 15 days away and equities looking strong, the market is definitely optimistic as risk reversals have flipped in favor of calls across the tenors. U.S. retail interest in Bitcoin, meanwhile, is still proving stubborn. CryptoQuant data shows that the Coinbase premium, the difference in pricing between the BTC to USD pair on the largest U.S. exchange, Coinbase, and Binance's BTC to USDT equivalent, is barely positive, even as Bitcoin sees its highest weekly close since early June. Our next top headline, CFTC chair says agency is handcuffed as crypto regulations stall, says report. Still, CFTC Chair Rostin Banim said a new Congress and President may accelerate crypto regulations. Commodity Futures Trading Commission, or CFTC Chair Rostin Banim, reportedly said the agency was handcuffed as crypto regulation talks have reached a standstill in the United States. Efforts to adopt a legislative framework regulating the digital asset industry have stalled out so far, Banim said at the Securities Industry and Financial Markets Association, or SIFMA, annual meeting in New York on October 21st. Still, he remained confident that a new Congress and President could make progress. I'm not betting on anything happening necessarily at the end of the year, but there's a unique appetite that this election, I think, has changed around digital assets and technology, he said, according to Law 360. He added that without any legislation, the agency is really handcuffed in policing the crypto market, which would leave investors vulnerable. That ends up leaving a really vulnerable market, leaving vulnerable customers, leaving institutional money on the sidelines, and ultimately not really helping support technology as it wants to integrate into traditional finance. SIFMA President Kenneth Benston said there was growing frustration in the finance industry as brokerage firms questioned whether it was possible to operate or achieve success by avoiding an enforcement action or if it was just going to be a constant liability for firms. CFTC taps into artificial intelligence. Rostin Banim also revealed that the CFTC used AI to police the markets. We are using artificial intelligence, different types of analytics, to comb through the data we collect, he said. He added that the agency had a huge opportunity to go beyond data analysis and use emerging technologies such as AI to detect market manipulation and cyber attacks and reduce the number of lawsuits. If we can start to use AI collectively to ensure compliance, I think there's probably going to be a lot fewer enforcement cases, he said. On October 17th, the Treasury revealed that it had been using machine learning AI to sift through data and recover $4 billion in fraud and improper payments in fiscal 2024. So this concludes Crypto Top Headlines. If you haven't already done so, don't forget to click on the like and subscribe buttons as well as the notification bell. Also, leave your thoughts in the comments and share this video with your friends and family. Thank you all for watching Crypto Top Headlines, bringing crypto's news to you.